Morning, everybody. Just as a brief introduction, got Darren, mortgage expert. He loves being called an expert. Please, any questions, bring them in. They can WhatsApp me, or you can put them at the bottom of the screen. We've got Richard Bradstock, friend of the show. Everyone knows Richard. RPA, got some great schemes, a great track record with us. And of course, Pete Wesley, who's on the show yet again to share his pearls of wisdom. So thank you, everybody. Thank you for jumping on. I think Brighton, of course, has got a very, very royal feel about it as well, with pavilions. So it seems unbelievable. It was only a week ago that the Queen died, but we just mark our respects. Over to you, Richard. Let's go to the first slide and hear all about. There we go. How slick is this?
Very good, very good. Morning, everybody, or afternoon, depending on where you are in the world. Evening, in fact, as well. Hi, Pete. Hi, Darren.
Hi.
So obviously, we're here. I'm here to talk about Brighton, to launch, or Brighton and Hove, I should say, to launch the RPA Group's brand new project, Goldstone Apartments. So this is within Hove, albeit Brighton and Hove are obviously one contiguous urban sprawl and treated as one city. And so I'm going to talk a little bit about the market, what's going on, tell you a little bit about the development, the developer themselves, and ultimately, obviously, more than happy to answer any questions anyone might have all the way through. So for those of you, we're very excited to be launching Brighton, or launching Brighton and Hove as a destination for investment to our, our buyers, our customers all over the world. I'm delighted to be working with Holborn on this as well. I think, for those of you that don't know Brighton, because it is a name that, whilst it's quite a famous name, as Chris says, you've got the pavilion and the marina and the beach, and there's always, as soon as the temperature goes over about 23 degrees, there's always photos in the Daily Mail of 1,000 people on the beach. So very famous location, very fun location as well. But we're here to obviously to talk about the the investment angle particularly, and what makes Brighton and Hove great. To start with, from a location perspective, we are, whether it's road or rail or air, in fact, Gatwick is only a sort of 20-25 minute drive up the M23. You're direct from Hove Station or Brighton Station into London in just over an hour. So, again, exceptionally well connected. And, Pete, you'll probably be able to, with your experience with the South Coast, I know you're down there that way, be able to talk a little bit about this. But Brighton has always been one of these locations that people moving from London love. It's one of the most, in terms of, if you're a family or you're living in London and you're looking to move somewhere outside of London, Brighton is one of the most popular destinations to move to, partly because it is still incredibly well connected, but what's obviously, it's also on the coast, and what's not to like about that, quite frankly. So location is superb. Just wanted to give you some headline figures around Brighton and Hove. So it's by UK standards, it's quite a big town, 474,000 people. For context, Manchester, in terms of Manchester sort of city, is only 500,000 people. So it's a similar size population to that. It's one of the top 5 cities for job growth in the UK. And it's also increasing, they've positioned themselves very intelligently, I think, given where job markets and so on are going. It's now one of the UK's top so-called enterprise economies, and it's particularly strong in the creative, digital, and IT sectors. We're going to be talking a little bit about the short lets market a little bit later on in this presentation. But again, I mean, this is a quote from Savills. It is, it's the strongest hotel market outside of London, and there is a fundamental shortage of overnight accommodation. Anybody that's had a night out or a weekend in Brighton or a holiday in Brighton will know that hotels are expensive and they're not always very good. And so this lends itself particularly to a market for short lets as a result. It's got some of the best schools in the country, 2 big universities, 12 million visitors a year, and 1.67 million. That should say 1.67 million, not 1.67 overnight stays. But it's also home to, you know, some major brands, American Express, Legal and General. You know, so from an economy and job perspective, it really is exceptional. We were talking just before this about sort of rental increases across the UK. Chris, I think.
Yeah, okay. No. So I was going to say, Pete, I mean, you're just down the coast, not long. And I know, by the way, and everybody should know this, that Pete insists on walking the bricks, as he calls it, on all the developments that we bring to our wealth managers, to our clients. So Pete, can you give us a quick 2 penny worth of what you saw?
Yeah, certainly. So I met with Kaprinka down there. Kaprinka's the young lady that does all the DD, and she has, as I think Richard will bear out, being tough is the best way to describe it. We want to tick in every single box to make sure that when we put something on the platform, it's befitting for Holborn clients. We want to make sure that it's great product. We want to make sure that it's in an area where there's going to be some capital growth. And that certainly ticks the box there. When I got down there, I had to pick Kaprinka up from the station at Hove, which was quite useful, because in actual fact, it's approximately a 4-minute walk to this site from the station. The other thing is you can actually get down to the beach at Hove in about 9 or 10 minutes. It'll probably take you 12 minutes to get back because it's all downhill on the way there and all uphill on the way back. But it's a great location, some lovely restaurants, which we also trialled while we were down there. And it's got in my opinion, it's got a higher end feel in Hove than it has in Brighton itself. I've got quite a few friends that have gravitated towards Brighton and Hove to live, in particular from the property sector that were working in London. So what's the driver there? It's the fresh air, it's the sea, and it's the fact that you can commute back into town really quickly. All of those things are very, very good. Likewise, the universities, I've actually been to one of them because my son was choosing between Brighton and Nottingham. He went to Nottingham, but even so, great facilities, a not so good football team, but there you go. That's the bias of being a Southampton fan. But overall, I would say this is a really great location. And I stopped and spoke to 2 or 3 people in various different property shops, shall we call them, including estate agents. And I also spoke to people that were working on site. And the guy that was managing the site there only lived about 300 yards away. And he gave me chapter and verse as to why the rents are so high and continuing to grow. There's really not a great deal of potential stock down in Hove. There are a couple of lovely developments nearby, but it's this is an absolutely great site. And
just, I mean, just on Pete, I mean, if I may interject, just on that particular point, in a radius of 3.5 miles, there hasn't been a new build property complete in the last 2.5 years.
I use a piece of software called Nimbus, which I do my research on, so I can back that up, because there was no new stock for sale or had been sold in the last 48 months, effectively. Just a couple of very small developments, but I'm talking small. I'm talking 4 or 6 units. So I think it's we use a saying in commercial property, and that is it's a protected territory. In other words, can other people go in there and muscle in and build similar developments? Absolutely not. So I think when you buy it, you're buying rarity value, and I think that's quite important. It's always important to have a USP. It can be that you go to Bolton, and I'm not saying there's anything wrong in Bolton. The beaches aren't very good up there, but I would say that you'll get a higher yield in Bolton or Newcastle, because you will. Will you get a higher yield down in Hove? Well, on the short-term lets, I've done a little bit of research on Airbnb. My daughter's an Airbnb avid fan. The rates are horrendous there. If you want to rent an Airbnb place for a couple of nights, they're silly money. If you want to rent a place for a week, there are lots of very small properties going £2,500 a week on Airbnb. So it's quite shocking. So I do feel very confident that this is something that you can tuck away in your portfolio. And on that, just in case there's anybody out there that are looking for slightly larger investments, I highly recommend looking at Hove in particular. If you are wanting 4, 6 or 10 units, it could be a really good hold, because you're going to have that capital growth. You're going to have surety of yields. I sent over a good little clip to Chris about the yield profile and the rents. The rents are continually growing. They've gone up 12% last year. They're going to carry on doing so, and this was confirmed by the agents that I went and spoke to. So there's a compression because there's no stock. So it's got all the fundamentals in the right place.
Great friend of the show, Karen Bobke, never misses one. Morning, Karen, or afternoon, Kieran. She loves it. She's from there and she fully endorses it. Richard, back to you.
I mean, just to add to that supply stat, I mean, there's a 7,000 unit supply shortfall currently, which is essentially 2 years worth of demand. So, you know, they're way behind filling that pot, as it were, with new build property. So let me move on. So, I mean, just to touch a little bit around these average house prices. Again, you know, Pete's just talked about rarity value, and that's exactly it, spot on. You know, the reality is that Brighton and Hove has outperformed the rest of the UK simply because of that on a basic level, and we fully expect that to continue. You know, there is particularly Hove, most of Hove is terraced housing or big houses. You know, there's very few areas where you can actually build new build, you know, apartment blocks, that sort of thing. And so again, that rarity value with the supply constraints that are naturally imposed on it will mean that the prices go up. The average price across Brighton and Hove is £870,000. So this is, you know, this is not a Bolton, as you say, Pete. Just a quick word on the lettings market. I've already touched on the facts. Well, to be honest, I probably don't need to spend very long on the screen, but what exactly, again, to echo what Pete has just said, you know, it is the best, according to Savills, it's the best performing hotel market after London in terms of revenue per room. And I will touch a little bit further on the short lets model and the returns, but assuming an 80% occupancy, which is quite honestly, from a Brighton and Hove perspective, probably light. You know, the numbers suggest that, conservative numbers suggest that we will be able to achieve net yields of around 7% typically across the units, and gross yields of upwards of 11. Actually, as soon as that occupancy rate goes up, which we would expect it to do so in a building of this quality, then actually those numbers continue to grow. Again, you know, one of the things that makes Brighton special is that it's not, you know, some of these sort of up and coming locations and so on, it can sometimes be imagined, it can be difficult to imagine living there. You know, Brighton is a place that I think we would all happily live in, Brighton and Hove. The Times have named it one of the best places to live in 2022, and they've actually named it the best city by the sea to live in 2022. In terms of migration, or in terms of transactions over the last year in 2021, a third of all transactions were people moving out of London and down to Brighton and Hove, and 2/3 were the domestic sort of local market. So this is, again, a very strong story because it is being perceived as somewhere that is just a fantastic place to be, ultimately.
Richard, one question's just come in from Tony Stanford in the Dubai office. Who would you say are likely to be the tenants as such? People commuting up to London, or people in the near? You know, you mentioned American Express.
It's a good question, that, Chris, and it links nicely to my next slide or two.
We rehearsed this for hours.
We do. No, I mean, look, your tenants here, in terms of your ASD or sort of standard let type of tenants, which is also an option here, your standard tenants here are going to be, you're probably not going to be families who want to live in a house and a garden. These are going to be young professionals, but young professionals in Brighton earn very well. And so from that perspective, you are going to have, I mean, look, as we saw on one of the earlier slides, there are big employers locally. You know, it's not just about commuting to London. London is a nice thing to have access to. And there will be people moving or, you know, walking 4 minutes down the road to Hove and getting on the train and up to London. But with obviously I think one of the reasons why there has been such a migration from London to Birmingham in the last year or so, particularly, is of course that, you know, that this whole sort of work from home thing, which COVID accelerated in the last 2 or 3 years, has meant that actually, you know, a lot of people here will probably be doing a couple of days a week in London, the rest of the time from home. And one of the things to mention with that is that this particular development has a co-working space literally designed to fulfill those needs. So, you know, that is that again could be particularly useful, because not everybody wants to actually work from home. It's nice to go down to a cafe or a working space, but not have to go into London.
It looks very smart.
We've also, so this is just a little bit, sorry, if I just zip back to this photo for a second. The development itself is made up of 3 buildings of varying heights. Building A, which is, it's actually not the best photo, I'll come back to one in a second, but basically staggered 10 floors for the tallest, 7 floors for B block, and then 3 floors for C block, which is the one you can see just through the gap there. We have communal roof terraces. Again, every apartment has a balcony or a terrace or something like that. So again, something that's very important in the, you know, Pete mentioned the fresh air, which is one of the reasons why people move to the coast, and that you need that outside space. And so again, this is very very important from that perspective. Just to give you the headline numbers, this is, I think, the way to think about this from a pricing perspective. It's similar to effectively a zone 5 London property in terms of your price point. You know, Brighton and Hove, it's not, we keep using Bolton. I feel like we're unfairly picking on Bolton, but it's not Bolton or it's not Birmingham. You know, it is a little bit more expensive. So what we have is a starting price here of 362,450 for a 1-bed. Just under 480,000 for a 2-bed, and there's a handful of 3-beds as well. 148 units across the development. Once half are sold, we will be giving it back to the developer, and they will be selling it domestically in the local market. 999-year leasehold. There's no ground rent, of course, and essentially a very simple payment plan: a 20% payment now, and 80% upon completion in Q3 2024.
Richard, I'd like to now just bring Darren in. Darren, you've obviously done your research and looked at the property, and I know it's a general question, but everybody wants to know about on the mortgage side of things. Are we still saying 65 to be safe, or are we okay at 70?
I would say 65 to be safe at the moment. Excuse me. There are a few lenders that do slightly more, but it'll be down to individual client situation. But 65 is safe at the minute.
And interest rates at the moment?
I wouldn't like to be drawn on that one, to be fair, Chris. After talking to 4 lenders yesterday, I think there's still some movement in the Bank of England base rate in the next couple of months. So I would safely say if any cash flows we're doing at the moment, I think you'd be talking closer to the 5% at the moment.
I think it's quite an interesting. It's quite an interesting point. Sorry, Chris. It's quite an interesting thing, though, isn't it? Which is why, as a mitigation against potential interest rate increases or whatever it might be over the next few months or whatever, is this short let opportunity, which does provide you with a higher net income than a traditional AST. Plus, of course, the other thing is that from a pure opportunity perspective, for anybody that's based in US dollars or dirhams or US dollar peg currency, I mean, we are effectively 15 to 20% cheaper in dollar terms than we were in May 2021. So, you know, there are still very strong reasons to buy.
Massively. And the other thing to think about as well, Chris, is obviously we're talking about interest rates now. Obviously, Richard's mentioned the properties are going to be completing at Q3 2024. Potentially, is that what you said, Richard?
Yes, correct.
Well, that's 2 years away. So who knows what the interest rate will be there? So obviously, the country and the globe is obviously going through some economic issues. But actually, if you look at, I know you shouldn't look at past performance, but I can't see interest rates continually rising and then in 2024 them being the same sort of level. Something's got to give.
Well, the American market is suggesting that it's showing signs of capping off. Interesting, they gave the inflation figures yesterday. Okay, there's some pent-up inflation in there just currently, but it's like when we all go and fill up with fuel. I went and filled up with some diesel yesterday, and it was 179 rather than 199.
Mm-hmm.
So we're already starting to see that go down. Just to give you an idea as well on construction prices, timber has fallen back another 6% this month, and steel's fallen back 7.5%. So we're seeing stabilisation of the core materials, which is good, because it just means that the contractors will start to see their margins be protected.
Yeah,
so it's all right setting the rates now, but actually what we'll do is 6 months before completion anyway, we'll go back into the market and provide new options, relevant options to that client at that particular point. So initially now, you get a client looking to reserve, they want to know they can get the funds now, and then we'll just do everything again for them 6 months prior to completion. So they'll get the exact rate, but they'll get at least have a flavour of the rates they are as they are at the moment.
If I can just say as well, I've got a favourite little thing. I've said it before, and I'm going to say it again. There's only one thing you've got to do to make money in property, and that's be in it. If you picked up a pin and stuck it in an annual diary right the way back over the last 100 years, doesn't matter which year you pick, including 2007, if you then put the long stop date in 10 years later, there's an upside in every 10-year cycle. There just is. It doesn't matter what you pick. So the fact is, they only build land once. It's not coming up anymore. We've got massive compression because of undersupply of stock. We've got an undersupply of construction capability as well. And I've said this before, but I apologise for those that heard it before. Last year, we had 750,000 dwellings short of a picnic in the UK. We then had a situation where we wanted to build 300,000 homes. We only built 160,000 homes. So that was an additional 140,000 dwellings getting put on that list. People are being born at a rate of 116,000 more being born than die each year. You've then got the net migration in the country showed at 326,000. So we're talking about a shortfall of dwellings of around 1.2, 1.3 million. We can't pick that up. It's not possible. And that's what's going to underpin the yields, and it's going to underpin the rents. So do feel confident. Don't take a really simplistic view. Look at the granular numbers behind it and say, okay, then would I invest in property? Absolutely. Have I done well on property? Absolutely. And for all of you, as part of your portfolio, you know, they always say you should have your 3 sections. So, I mean, if you look at stocks over the last 6 months, 9 months, they're horrendous. And I've got some. And I'm still going to sit and wait, hopefully, for them to come back. You're not going to see those falls in property. You're just not. It's not going to happen.
No. And it's, you know, it's such a good point, Pete, because in the short term, the effect of that with the lack of ability to build and the lack of sites and also the very short term instability that all developers have these days with building costs and things like that, it just means there is nothing being built or coming through, or, you know, there's a reduction in the amount of stuff going through planning and all, you know, so, and all that leads is to increased rents and increased prices over time. So yeah, it's an excellent point.
Richard, I was going to say that I actually so you got a cash flow there. Sorry. I didn't realise.
No, so were we going to ask a question about that?
No, I was going to say, you and I spoke, and I put it onto the group that with your other development up in Birmingham, Scholars Quarter, which has been incredibly successful with Holborn, and of course Bookbinder and Acton. I was just going to ask if you could say a few things about that, but I've
absolutely.
preempted your cash flow.
Look, I'm not going to go through this cash flow document now. I just wanted to highlight for all the wealth managers, all the Holborn clients who are listening, that we have very detailed cash flow analysis that provides cost and returns analysis based on individual units and based on the short-term lets or the standard lets, the ASTs, depending on how you're looking at it. And they're all very kind of attributable to the individual. So what I would suggest is, if you want to have a detailed look at this, please do get in touch afterwards, and we can talk. Whether that's one of my guys here at RPA or around the world, or myself, more than happy to talk that through. But the return on equity, the return on investment, I should say, is excellent, based on some really quite sort of reasonably conservative numbers. We also have a document which is for those that like reading. I appreciate not everybody likes walls of text and graphs and things like that, but lots of information, a 10-page document around Brighton and Hove that has all the possible information you could require on that if you want to read a little bit more about it. And then to come on to your other question, Chris, just now. The only thing just to then just mention is the developer. So this is a developer that we've worked with now for the last 3 years. And quite frankly, they are an absolute pleasure to deal with. They're brilliant around completions. They're brilliant. Darren will testify to this in terms of, the sort of the mortgage, and there can be delays with mortgages and things like that. And they are excellent to work with around that phase of thing. And that cannot be underestimated. We've actually got 3 projects ongoing with them at the moment. We've got a site down in Ashford in Kent, which is a lot cheaper. We've got a couple of units left there, and then we've got 2 sites in Birmingham. One which we sold 2 years ago and is now handing over, and I'm just going to show you a couple of images for that. And another site immediately next door called Scholars Quarter, fully financed, all the rest of it. Which is under construction now and provides the long-term sort of off-plan option as well. So what I would say is that just with this, I mean, we have other product too, but with this particular developer, we offer a range of products and an ease of access into the again, I honestly do not think that can be underestimated. So this is a few images from the Copperworks, which is the site that we launched about 2 and a bit years ago now. It's a mixture, is half a dozen smaller buildings, all of which are now coming up to completion or have completed. This is a development called the New Schoolhouse, and just some interior photos. It's really well finished. They've basically been completing over the last 6 weeks or so, and the rents we're achieving are, again, to Pete's point a moment ago, the rents we're achieving are about 20% above what we were predicting 2 years ago. So absolutely fantastic from that perspective. So just quickly, just in terms of location, because we are getting quite a lot of questions from people who want to, given where the pound is, they want a ready product, and this is a ready product from a good developer, well finished. So where this little icon here is, this is the Copperworks, and you can see from this image that you are so close to everything in the city centre. And on Pete's point around rarity, this is the same thing here within the jewellery quarter in Birmingham, because it is a conservation area. There are restrictions on how much you can build. There's very, very few sort of free sites now with which to actually go and build, more units. There's a height limit of five stories on any product that is built there. And so we've only got a handful. There's literally only, I mean, it's virtually sold out, but there are a handful of 2 beds. I think there's one bed. There's a handful of 2 beds. There's a couple of 3-bed townhouses within the Copperworks, which are ready for rental, ready for occupation, that are available. And then we have another site on this vacant plot here, which is now actually, I mean, this photo's out of date. It's now well under construction. This is a site called Scholars Quarter. Again, the same developer. And this is handing over at the end of next year. You know, so again, excellent, you know, excellent location, really can't be matched, I don't think, from that perspective.
And given you're there, on purchase price for, oh, you're going on to that now, aren't you?
Yeah. So, nice to see we're on the same wavelength, Chris. Yeah, so in terms of the Copperworks, as I say, there's only a handful of units left, so it's a first come, first served basis because it's sold extremely well. It's also valued extremely well from a mortgage perspective. You know, so it's done exceptionally well. So these are one beds. There's one bed at 250. There is a number of 2 beds around the sort of 325 mark, which are quite sizable units. And then there's some sort of bigger duplex and 3-bed townhouse type units, which are more like 400. So there are some units there, and that is ready now, literally, to take ownership and, you know, sort of move into, or get a tenant moved into. And then Scholars Quarter, which is the off-plan product we are working on in Birmingham at the moment. Prices from, actually that unit 199 has sold. The entry level is now 217 because it has sold extremely well, and thank you to everybody at Holborn who's contributed to that. And so this is, again, 1 beds now in terms of available units from 217 and 2 beds from 292. And this is literally next door, as you saw from that photo, to the Copperworks. Obviously, I'm more than happy if, you know, to talk about other locations, but obviously we have a lot of London products, and, you know, and so I'm pretty sure that we can service most requirements. But just very quickly, a little bit about who we are. We're headquartered in the Middle East, an independent agency, and I hope that everybody's experienced this. I'm sure, you know, I think they have, but certainly our sort of the goal that we are trying to achieve here is making sure that we are working with the right developers, with the right product, and ultimately provide a service that is, you know, that is number one in the industry. So we have, as you can see there, we have representation in, you know, in many different markets, and I know a lot of the wealth managers on the school already know one of the guys who works with us here. So if you don't know anyone and you would like to talk to someone, then Chris is your man and can introduce you to whoever might be suitable.
We had a fantastic meeting earlier this week, Richard, didn't we, with our friend that is looking at Bookbinder in Acton, which you know, London is always going to be London, isn't it? I know you're from London and you know London, and you worked in London and you're very familiar. But that Acton one, although we're talking London prices, the story behind it is fantastic, with the 4 different rail links servicing that area within about 5 minutes. It's worth looking at. It really is, for people that like London. And I know Pete is looking very, very seriously into London as well. And Pete and I have been talking about
just on that point, Chris, what we're doing, there's a few things going on within Holborn, which you will get to know in the fullness of time. But we are setting up a separate division, effectively, called Holborn London Property, and it'll be specialising just in everything inside the M25. And that's something that we'll be able to talk about, Richard, further with your products.
Yeah, absolutely, more than, of course.
I do like bookbinders, and the other thing, of course, which Pete and I were just talking about yesterday, is if there's anybody out there, and especially wealth managers, you know, always speak to Pete if you've got somebody who wants to do a bulk deal, or Richard, of course. You know, we sometimes forget there are people out there who are responsible for some big funds, who may be interested in buying a whole floor or a corner. I know we're not exactly talking about to buy stuff, but and of course Darren is always willing to lend lots and lots of money, so that's easy.
I was going to say, actually, Chris, we've actually got quite a lot of lenders that will do multiple units as well. So if somebody wants to buy more than one, they're quite happy to do. They're quite more specialist lenders, but they will do so. We've got some wealth banks that will look at the individual clients and make a decision, not just on the rental, but their overall portfolio. So I'm just doing one at the moment where the client's buying 7 units in one development, and it equates to about £8 million worth of lending, and the lenders literally signed it off this morning.
Wow.
Which is, I didn't even think it was going to go anywhere because the client's in Kenya.
Fantastic.
His income is from Kenyan owed money, so there was no one else could do it. So the Wealth Banks come up good. So if you've got an unusual one, pass it through to me. I'll do my damnedest to try and find some funding for you.
That's brilliant. Thanks, Darren. You're always there every day.
Can I just add, Chris, can I just add, obviously, these are just screenshots from our sort of our quarterly property portfolio, as it says there. There's actually, this is just a couple of pages from it. There are, you know, we're always, there's a range of product that we, particularly in London, that we work with in terms of, you know, big developers like Galliard that we have access to, but which isn't on here, and so it's always worth. But do you know one you know, London, again, coming back to this point on the rents and returns, London rents have gone crazy in the last year, 18 months. So it is a location, is traditionally not somewhere that you buy from a rental perspective, from an income perspective, but the, again, scarcity of stock and demand has meant that, you know, there are some serious increases in those rental numbers. We've just completed on a site in Harrow that again was up 25% from the original prices in terms of rents achieved versus rents quoted only 14 months before. So yeah.
And there's been yield compression in the London stock over the last 18 months. Prime London is down to 3.2%, which it might sound fairly scary, but it's that scarcity value. The other thing is that the international market, they still love London, and they always will. Yeah. So a balanced portfolio is quite good. You know, if you've got 2 units in Bolton, 2 in Manchester, 2 in Birmingham, 2 in London, and 2 in Hove, that's a nice little portfolio to have. But in actual fact, that's something again that I think Darren would be able to help you with, because if you look at, if your clients have got some cash available, and they've also got other assets that they've held for a while, it may be possible for Darren to get some leverage out of those existing properties and build that portfolio. If they can put 1 on a year into a portfolio, and I think we should be focusing on getting investors to look to build a portfolio of 5 units over 5 years. It's more than achievable. And you've then got a blend, and you've got the amortization, so that if you get a bad year and it goes down very slightly, and then you're going to get a good year, so it's going to lift it back up again. Pound cost averaging always will resolve things within property.
Absolutely right. Okay, well, thank you very much, everybody. Thank you, Darren.
Thank you, Chris.
Always there every week. Pete, thanks for your insights. Unbelievable. Richard, always good. Thank you, everybody. This will be recorded and will be on the Holborn Assets property website under our services, along with about 100 other award-winning shows. So please, you know, it's if you're fed up with watching the television, you can spend a whole weekend binge watching Property Thursday. So thank you, everybody, and thank you to Vincent. First time you've done that, and done an excellent job. So thank you, everybody.
Thank you, Chris. Thank you, Pete.
Thank you.
Thanks.
Cheers, Darren.
Thank you, Richard.
Cheers.
Thank you, Pete.
See ya.
Bye.